Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Forestar Group Inc. Quarterly Report. Forestar Group Inc. is a leading residential lot development company in the United States. The company's primary business involves acquiring land and developing infrastructure for single-family residential communities. This includes constructing roads, utilities, and other essential amenities that make these communities habitable. One of Forestar Group Inc.'s key services is selling finished lots to local, regional, and national homebuilders. These builders can then purchase the lots and build homes on them, catering to a wide range of customers with varying budgets and preferences. By providing this service, Forestar Group Inc. plays a crucial role in meeting the demand for housing in various parts of the country. In summary, Forestar Group Inc.'s main businesses and services include acquiring land for residential development, developing infrastructure for single-family communities, selling finished lots to homebuilders. These core activities enable Forestar Group Inc. to contribute significantly to the U.S. housing market, supporting the growth and development of new communities across the country. The Forestar Group Inc. stock price has remained relatively stable over the past year, with only a 2.28% change in its overall value. This stability can be attributed to several factors, including daily market fluctuations that did not exceed the 4.46% threshold. One of the primary reasons for the lack of significant changes in Forestar Group's stock price is the absence of major news events or announcements that would typically impact the market. The company's analyst rating updates, such as J.P. Morgan's neutral recommendation and Citigroup's buy recommendation, did not have a substantial effect on the stock price. Additionally, the announcement of earnings release dates, including the fiscal first quarter 2026 results, did not cause significant volatility in the stock market. However, it is worth noting that the actual earnings reports did lead to changes exceeding the 4.46% threshold, with shares falling 5.1% after the January 20, 2026 release. The stability of Forestar Group's stock price can also be attributed to the company's consistent performance and lack of major setbacks or controversies over the past year. This consistency has likely contributed to investor confidence in the company, leading to a relatively stable stock price. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of the key factors influencing sales and profitability. On the growth side, a significant increase in earnest money deposits on sales contracts has contributed to revenue expansion. Additionally, a decrease in accounts payable and other accrued liabilities has also positively impacted revenue. The company's net income has shown a slight increase, indicating overall financial health. Seasonality plays a role in revenue growth, with higher revenues in the fourth quarter due to increased lot deliveries and sales. Sales of residential single-family finished lots to local, regional, and national homebuilders have also driven growth. Transactions with D.R. Horton, one of the company's major clients, account for over 10% of total revenues. Furthermore, the acquisition and development of residential real estate have contributed to revenue growth, with significant investments in these areas. An increase in average sales price per lot has also positively impacted revenue. The company's own lots and controlled lots through purchase contracts have grown significantly, providing a solid foundation for future growth. On the decline side, a decrease in residential lot sales has been a major factor contributing to revenue decline. Sales to D.R. Horton have decreased, both in terms of revenue and number of lots sold. Ongoing affordability constraints and cautious consumer sentiment have also impacted new home demand, leading to a decline in total residential lots sold. Overall, the company's revenue growth is driven by a combination of factors, including increased sales, reduced liabilities, and strategic investments in real estate development. However, declining lot sales and decreased transactions with D.R. Horton have contributed to revenue decline. The net income of the company experienced a decline between two periods, decreasing by $1.1 million, or 6.7%. This reduction in net income is evident when comparing the figures for the two periods, which stood at $16.5 million and $15.4 million respectively. A closer examination of the profit margins reveals that both gross and operating profit margins have decreased. The gross profit margin dropped from 22.1% to 20.3%, while the operating profit margin fell from 8.7% to 7.6%. These decreases in profit margins suggest a decline in the company's ability to maintain its pricing power or control costs, leading to reduced profitability. The decrease in net income and profit margins can be attributed to various factors such as increased competition, rising operational costs, or decreased sales revenue. However, without further analysis of the underlying data, it is difficult to pinpoint the exact cause of these declines. Nonetheless, it is clear that the company's financial performance has deteriorated over this period, warranting a closer examination of its business strategies and operations to identify areas for improvement. Management is optimistic about the company's outlook and strategy. They aim to maximize returns through investing in short-duration projects and expanding lot development operations across 64 markets. This approach will help consolidate market share in a highly fragmented industry. To achieve this goal, management plans to focus on developing lots at affordable price points while managing pricing and sales pace. They will remain disciplined when investing in land opportunities and leverage their national footprint, low net leverage, strong liquidity position, and strategic relationships to drive growth. The company's financial position is also a key factor in its strategy. With low net leverage and a strong liquidity position, management believes the company can operate effectively during changing economic conditions. However, long-term growth objectives will depend on securing sufficient financing to support expansion plans. The company's financial policies have been shaped by its obligations and priorities. One notable aspect is the restriction on paying dividends due to the indenture governing its 2028 notes. This means that for now, shareholders can expect no dividend payments from the company. On the other hand, the company has shown a willingness to return value to its investors through share buybacks. With an authorization of up to $30 million and remaining unused at December 31, 2025, it is clear that the company is committed to buying back shares when necessary. This strategy allows the company to reduce its outstanding share count and potentially boost shareholder value. Concerns about inventory buildup and supply chain disruption persist in various industries. One area of concern is the extended development cycle times due to delays in receiving necessary approvals from municipalities. This delay can lead to increased costs and reduced efficiency. Additionally, while disruptions in the supply chain for certain construction materials have largely subsided, there are still concerns about return on inventory. Companies must carefully manage their inventory levels to avoid losses and ensure a smooth supply chain operation. That concludes the financial summary for Forestar Group Inc. Feel free to comment below, and I will be happy to answer them when possible.